Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Tuesday, May the 9th, 2017. My name is Doug McKay. I am the founder of Quantum Leap Futures. Each morning we get together in these go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses for the day. We do create multiple hypotheses in order to have a plan in place. That way we do not have to create one. We just simply have to see what the market is doing and then pick the plan that is most appropriate to what the market is throwing at us. This is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do everything here live in the go-to during the pre-market session, and we do live trading and analysis during the course of the RTH trading session. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, so taking a look at yesterday. Yesterday, our Hypo 1 was a open auction in range, a move down into the value, and somewhere between the value area and the 87.50, we were looking for initiative buyers to step in and start working our way up towards that week high at the 23.98, that double top, the all-time high in the RTH. And we're looking for that move up to equalize. We had an unequalized high between the March contract and the June contract at the 24.01 and the 23.98. Then on Sunday night, we went in and put a new all-time high. We equalized the June contract to the March contract, but what we did is we created an unequalized high between the Globex and the RTH. And so we're looking for the RTH to go up and take out that and equalize that all-time high, which we put in on Sunday night now and is our week high at 24.0375. Yesterday we had an alternative hypo, which was Hypo 5, that I said could come into play. And that alternative hypo was an inside day and a chop in this low volume area and a sideways day with a very tight range. We only had 8 points of range yesterday. We accepted the overnight VPOC, which was at 23.95, and we've just went sideways. And hypo, sometimes we have this alternative hypo which can kick in, and yesterday it definitely did. Now, currently, right now, we have gone up and we've tested the 23.99 and rejected it. We broke that week high, but it's still a week high in the Globex. In the RTH at 23.98, and then yesterday's high at 23.9775. Let's take a quick look at the news. There isn't much news today. We did have Canadian building permits. Didn't even check to see what they were. Oh, they came out terrible. Minus 5.8, expected 4.2. 10 o'clock, we've got JOLTS jobs, we've got final wholesale inventories, and we've got IBD, tip economic optimism. And then later, at the end of the session, we've got Kaplan speaking. And the odds now, they're saying the odds that, forget the website that predicts the odds for a rate hike is now running in June up to 100%. So looks like we're going to get a rate hike in June, supposedly. We'll see. Especially if we're going to be trading in new all-time highs going into it, I think it definitely puts the probability in favor of a rate increase. Now, each day I like to start my day with a simple candlestick chart. I use my paper money and just a very simple candlestick chart with a 9 EMA and a 20 SMA. And what I'm doing is I'm checking the different time frames to see where we are within the trend. I want slope and separation of the two moving averages to tell me the strength of the trend, where the trend is being challenged or could be violated. You can see on the monthly, we put in this new all-time high at 24.03. taking out that 2401 and equalizing the contracts between June and March. And we've got this beautiful upward trend. We don't even begin to challenge the trend until we get down into the 2296 area on the monthly. Going to the weekly, our week open was 2402.50. We went up on Sunday night and hit that 2403, and then yesterday we rotated down to the week low at 2389.75. But we are maintaining this upward trend after we gapped up 2 weeks ago. So the trend is up on the weekly. On the daily, we have still maintained our upside trend. What we want to watch for today is if we get this inside bar and we do not take out the high or the low from yesterday at the 97.75 or the 89.75, then I'm looking for the possibility of a rotation down to test the 87.50, and then any break of that, we're looking for a move down to the 68. I think the break's going to be the upside, but that's my own personal preference, and that doesn't mean that the market's going to do it. On the intraday, as we move down to intraday, you can see that we still have good slope, good separation. We're holding the 9 quite nicely and starting to parallel up on the 4-hour. 1 hour, same thing, trend is up. 30-minute, same thing, trend is up. We're not going to have a Mr. Sneaky here. So everything going, into this RTH session is we're nowhere near violating the upward trend. So get into the 5-minute and we're getting a little bit of weakness, but it's more reactionary to smaller wiggles. So where's your risk today? And this is a simple question you have to ask yourself. Where's your risk? The risk really is to the upside. So you want to be careful and don't get too short and don't get too stubborn on that short, because risk is to the upside right now. Taking a look at the structure, you can see that we had this 8 days of balance going sideways, testing up, testing down. We accept the price higher at the 2383.50, and then we get our significant breakout day. We said look for a rotation back to the 50% of the significant breakout day, which was at 91.50. We did that. Now we've come up and we're moving, and we're we've broken that 98 double top that we had. 2 days balance. I always like to see where are they accepting price after the breakout is right here at that 95, and that was our Sunday night Globex, okay, VPOC. And our VPOC for yesterday was 94. So between 94 and 95, we're accepting price higher, and we're looking for that continuation. Key line in the sand for us today is going to be 91. If we get below 91, then I think we'll come down and at least test the 87, if not the range low from yesterday, which was down at, what was the overnight low? 85. And then possibility of coming down to this 83.75. Sorry, yesterday was this day. And we're still in the Globex. The low yesterday, I'm sorry, was 89.75. So just watch this 91. Know that your risk is to the upside. We don't have anything to gauge us except there's 3 measured moves, and I haven't put them on the chart yet, but they're all around this 2405 area. So those are our upside targets, and then we've got the rule of 10 and the 2410 coming in as a possibility later in the day. So taking a look at our Globex. Our Globex inventory is net long, roughly 60 to 70%. We did just go put in a 23.99 print. Now we're rotating down off of it. So basically the inventory is net long overall. So start moving our numbers over. Our overnight high is 99. Our overnight low is 93. Our overnight VPOC is not likely going to shift. It's going to stay there right in that 94, 95 area. It's 94.50. We have an LVN at 96.50. So we've clearly tested and auctioned this 97.75. So I'm going to be using this LVN, this 96.50, which is also the value area high for overnight. That's going to be a trade area for me. I think we're going to chop at this this 97, 98 area, so I'm not going to trade off of it. I'm going to wait to see how they handle the 96.50. If we get below it, then I'm looking for them to come down into the 95. Very, very tight range yesterday, even tighter value area. I cannot trade this tight of a value area, so I've got to trade the LVN and the value area from overnight into that 95. And then the value area low is the first spot that I want to pay close attention to at the 92. I'm actually going to use 92.25 rather than the 92.50 because it's the value area low. And then, of course, I'm looking for a push down into that 89.75 with a target of 91. It was 91, right? We don't need this anymore, so let me get rid of this, expand this out. It was 91, yeah. So 91 is going to be my over-under line. Okay, and below that, I'm looking for a move down into this 87, okay, to test the value area high and this naked VPOC. And then the next area is the 85, and the next key target is going to be 83.50, 84. And this is my next big target below right now. It's not the daily downside. I still have to put those in. So let's do that. So our 20-period daily full session ATR is still compressing. It is at 1590. So if we go 23.99 off of 15, and take 1590, 23.83. So we have capabilities to get right back down into this balance, okay, within a regular ATR, average true range. Off of the low overnight, our upside ATR target is all the way up at, this is not overnight high, it is the 2403.75 is the new all-time high. And our daily upside ATR target is 2408.75. So that doesn't really change. And then we've got the 2410. And there's really nothing to gauge in between that. There are some zipper measured moves. Okay, I'm not going to put them all in, but they're all sitting right here around the 2405. I'm sorry, they're not zipper measured moves. They're Fibonacci extensions. There's 3 of them. And they're all within like 3 or 4 ticks of each other. So currently right now we're trading at 23.97. We obviously can put in a new overnight high. We still have 30 minutes to go. But right now we have to take with what we got. My main hypothesis for the day is I'm looking for responsive sellers on the open as my hypo 1 and a move down towards the 95 to 93 area, finding initiative buyers and rotating us up breaking that 2400 and coming up into the 2403.75, chopping back and forth, probably chop through 2400, and I caution on this. And there's so many traders that get caught up in a centennial number. They are going to suck the longs in, and then they're going to flush it, then they're going to suck the longs in. We'll probably whip through this 2400 this morning, okay, or sometime today when we start testing it again, and we'll probably whip through it, you know, 2.5 points on each side as they punish those that want to trade around a centennial number. I used to trade centennial numbers all the time. I know how to trade them now. I don't try to get in at the 2400. I'm either short into it or I'm long into it, not trying to get long just above it or short just below it. Hypo 1, responsive sellers on the open, fight this open, move down, okay, into the value area between 95 and 93, find initiative buyers, rotate us up, break into the 2400, chop, push up, and take out the all-time high and equalize the high between the Globex and the RTH, and chop around maybe a late date probe up into the 2409, 2410. I think we close somewhere around 2400, and I wouldn't be surprised if it's below it. Hypo 2 is going to be an open auction in range, a push up, a move into 2400, failure to hold the 2400, and then rotate down through to the 2393 area, okay, chop around there and then push down into the 87 to 83 area. That is Hypo 2. Hypo 3 is going to be an open test drive, failure to take out the overnight low and the naked VPOC, probably a bounce off of 95. Open test drive, test the range high, and then buyers take control, rip us up into the 2405 and go sideways most of the day and chop in the 2400 to 2410 area. That is Hypo 3. Hypo 4 is a failure to take out 2400, rotation down to the 92, chop around between 92 and 95, and then fail and push down through and come down and close somewhere back in balance here in 83. So those are the four main hypotheses. I still think the risk is to the upside. It is Tuesday, so it can be a turnaround Tuesday. So don't get stubborn on either side, but you got to understand the risk is probably to the upside today. And gold is broken down. So let's take a quick look at it. Gold is right back down. Now remember that the composite VPOC, or the most traded price going all the way back to October the 9th, 2008, was originally here at the 21.7. And then it shifted up to the 54.70, and then it shifted up to the 66 area. Then it shifted back down, and now, okay, we're coming down, and we did not hold above that 25. I said 25 is going to be crucial to hold. Where we're at, we're right here, chopping around in this area. I'm going to be watching for gold to get a composite shift down, okay, back down to the 21.70. If we can't hold the 21s and find balance here, then I'm looking for them to push down to test the lower side of this balance and test this 14 area. And then anything below 14, your first target is 097, but I would be looking for a move down to test where this whole move started up, okay, and down to the 1200 and dipping into the 9. The next big destination is down here at 1195.20. But it's really important how we react to this price point right here, right where we're at in this distribution zone. Anything above 25 60, look for them to rotate back up into the 4-day balance, up around the 28 and the 29, where we've been chopping, and chopping between the 27 and the 32. But if we can't get above the 25, chop in this area, or not hold the 20s and push down to the 14s, and then 14 will be our next really big area to see if we hold. If we don't, then it's 1200 in my mind, and I'll be looking for a move down into testing the centennial number. Anyway, that's everything I've got for you today. As always, trade well, trade safe, and we'll catch you on the flip side.